Hi everyone, it's Martin Shkreli here, August 6th, 2017. It's week 16 of this weekly podcast. Thank you so much for making it a success. Episode 16, I'll call this the special verdict edition, because as you guys know, my jury trial is completed, so happy that that's over. Quick market update. Really nothing going on here that's very special. Let's see. Yeah, just a quiet summer. Q2 earnings season still in full swing, but mostly over. Nothing happening in bonds. Pretty normal capital structure across the markets. Very healthy. Yeah, sort of the same as the last 2 or 3 weeks. So. Pretty easy going. Biotech had a kind of a bad week just because I wouldn't call it biotech, but all of pharma, just because of Teva. We'll talk about Teva in a minute, but we're sort of seeing this generics sort of Armageddon, and we'll talk about that in a minute. But in general, conditions are pretty normal. There's a little bit of weakness that's starting to appear, but I wouldn't take it too seriously. Bitcoin had a big rally. That number is a little understated. Bloomberg gets the Bitcoin closing price a little bit early, so it's quite a bit higher than that right now. So Bitcoin's breaking out to all-time highs, which is pretty exciting. But yeah, it's sort of been quiet in the markets. So obviously a lot of you guys pay attention to the world around me. So I thought I'd just mention some quick thoughts on the trial in case you missed them. I was found not guilty, so I was acquitted on 5 counts of the 8 counts indictment. That was very exciting news. In fact, when I heard the first 2 acquittals, I thought for sure there'd be 8 in a row, but it turns out I was wrong. So I was found guilty on 3 of 8 accounts, which makes me a convicted felon, which is sort of an amazing thing. I don't think I'd ever in a million years thought that would happen to me, but so be it. The government had a very insane theory that money was taken from Retrophin and given to my hedge fund investors. They were proven wrong by a very smart jury. I'm thrilled that the jury sort of popped the government's bubble very loudly. That was the government's big overarching claim that it's the reason they did this. So I'm very happy that was proven wrong. But that was the good news. The bad news is the fund investors were found to be misled, although they made 2 to 5 times their money. And that's without any of the allegedly, how should I put it, allegedly improper settlements. So it's a pretty good return for those investors. I was kind of happy that we spent all of this time talking about how much money my investors made. I was gratified to see that. And most importantly, I made $31,000 over 4 years, which is about $7,000 or $8,000 a year. I think most people here know that's not a lot of money for working around the clock all day and all night. I think you guys see my work ethic even here on a Sunday. I worked probably harder in those days. So this big, bad, illegal scheme was all to make me $31,500. So it doesn't feel very fair, but that's life. I will say that not all of the facts and evidence were available for the trial. We've uncovered new facts and new evidence since the start of the trial that we will present that are even more compelling. I think the government broke a lot of rules and procedures and even laws in order to get this indictment, not the least of which is manipulating witnesses and threatening witnesses and doing all kinds of nasty things. So I think in appeal and in some post-trial motions, there's some chance of getting rid of these 3 counts. I think one of them for sure will go down. So the remaining 2, we'll see. Maybe they'll win on appeal. Maybe I won't. But assuming I won't, the United States sentencing guidelines would suggest 0 to 6 months of incarceration, which I think is a pretty good outcome I think the government tends to, when they feel like they want to incarcerate you, they use the criminal justice apparatus to do so. And I think I largely have sort of defeated the government. On a scale of 1 to 10, with 1 being a complete acquittal and 10 being a complete conviction, I think we scored a 2. Now, of course, I wanted to score 1, but this was as close as one could get to a full blowout victory. We're just 1 step short of that. So, it's a mixed outcome for sure, but I think I'm pretty happy with it. So, we'll move on. Second week of earnings season. Biggest story in the market was Teva. Teva stock plummeting on bad earnings and a bad outlook. A little bit surprising. The generics business has been struggling for some time, so this was a really big reaction. The stock went from 33 to 20. I want to say that's a 35-ish% decline. Teva also has a gigantic Venezuelan business, believe it or not, and you think that they would have written that off, or that would have been sort of in expectations already, but it's not. So the real reason Teva's down a lot is they leveraged up quite a bit to buy Allergan's generic business. So not only were they already kind of in trouble for being the world's biggest generic drug maker, but they borrowed $30 billion to become even bigger. So there's actually a chance that Teva will have to deeply restructure their business or even file for bankruptcy. So if you let's take a look at some of the debt and see how the debt's traded. But you can see the bonds have dropped. The yields are starting to go up. I'd probably short these bonds, or at least short the stock and maybe buy these bonds as a hedge. But it's definitely a mess. And a lot of people want me to look at it and see if it's potentially worth buying. I think the problem with stocks like this is if you look at their, let's take a look very briefly. If you look at the enterprise value is $55 billion, even though the market cap is $22 billion. So basically, this is a company run by debt. The equity is worth less than the debt, which anytime you're in a situation like this, I think you play the debt. I don't think it makes sense to look at the equity anymore. That was the case with Valeant. That's the case with a few other companies. Obviously, you want to look at both, but you have to really start thinking about looking at the debt instead of the equity. With respect to the numbers, again, it's somewhat hard to really understand what's going on, but you can see that the EBITDA is pretty serious EBITDA of about $6 billion or so in EBITDA. Now that EBITDA is going to be dropping, it could be 10 times EBITDA or something like that, which is not really cheap at all, given the potentially there's sort of systemic sort of challenges to the generic business. Pfizer, Allergan, Sanofi all reported in line. Sanofi and Regeneron reported a $29 million Dupixent first quarter. Dupixent is the dupilumab, the new eczema drug that I think could be one of the biggest drugs of all time. This isn't a terrible quarter. It's sort of not a huge number for a drug that you would hope would be the biggest drug ever, but it still doesn't mean that it can't be one of the biggest drugs ever. I think it could, even with that number. Antibodies sort of take time to go up, and you just add more and more patients every quarter. So, it's I think most people think it'll be a multi-billion-dollar drug, but the idea that it would be a $5 or $10 billion drug may be out of the picture now. But either way, I still like Regeneron stock. Allergan's Linzess, or Ironwood's Linzess, had a bad quarter, so Ironwood dropped pretty nicely. It's a short I just put on. I think the stock can go lower to maybe $10, so we'll see what happens there. Apple obviously had a huge quarter. Again, this episode will be a little shorter just because I had so much going on last week that I didn't get a chance to look at the markets last night, and I had a big celebration party last night, which cut into my ability to work, including this morning. So it'll be a somewhat short call. Anyway, Stamps.com had an enormous quarter, and the stock went to over 200, which it probably shouldn't be at. But if you guys were looking at the earliest investing lessons, I think there were 10 or 20 of them that I did, 15 or 20, I should say, recordings. We looked at Stamps.com as an example on how to value a company, and we found that it was quite cheap, actually, and I bought some of that stock. And I'm delighted to see how it's done. So it was pretty cool to sort of see that. Tableau had a really good quarter. I'm short a little bit of Tableau. I'm still trying to learn it, but again, I think one of the best ways to learn stocks is just to have a tiny bit of exposure to them, so you can learn them without, because you have money on the line, but you don't have to put your neck out and make it a big position. So it's sort of good for me to learn some tech stocks. It forces me to watch them and look at them. So it's sort of fun. Not a lot's changed. Again, last week was kind of maybe called a vacation week for me. I had a lot of things going on, and this weekend was as well. But I'm excited to get back to work on Monday after a good, 4 or 5 weeks out of the office. So very excited to go back to work every day from here on out. So that's largely that. Let's look at some news, or let's look at the portfolio actually. So the portfolio did well, again, up 20 basis points, which is fine. Pretty good week. We're up to 10.2%, 45% gross exposure, and that's with a lot of kind of probably 10%-ish of just big, fat, kind of low beta stuff. So I think it's closer to say like a 40% gross and 10% net, which is very much market neutral and not exposed to beta in any way, shape, or form. And now this has only been 16 weeks, so if you annualize these numbers, we've had an amazing run of stock picking, which again may or may not continue. We'll see. Gilead's still our biggest investment. We'll talk about that in a minute. I mentioned Regeneron and dupilumab. Avexis is doing really well, maybe because Spinraza is selling so well, maybe because people are figuring out this is a total cure for spinal muscular atrophy and the stock should go to 500. But that's why it's one of our biggest investments. Still on Alexion. Bristol Myers I'm probably going to sell. I've mentioned that a few times. Spark had good data. If you haven't seen that, it's sort of data we knew about, but that stock contributed quite a bit this week. GSK, and thinking about increasing the investment. We'll talk more about that in a second. The other heme-affiliated stocks are not doing as well as Spark, although Unicure is doing pretty well. Sangamo is kind of not doing so great. So anyway, we'll see how that goes. Nothing really crazy on the short side. Again, a lot of people were, Regeneron kind of went down last week, and some of these other stocks didn't do so great. Like Gilead didn't do great last week. But, we still made money because you have to have shorts, and I think a lot of you guys don't short stocks, and it's not good. You can't really have an equity portfolio without shorting, in my opinion. I've spent a lot of time talking about that, and I really believe that that's the case. Acadia reports soon. We'll see how that goes. Neurotrope is almost bankrupt, so I'm excited to close out that position soon. Ironwood, like I said, had a somewhat bad quarter, so that stock fell apart quite a bit. Anyway, that's enough of that. AbbVie got approval for their new Hep C drug, and there's going to be, I guess, a price war for Hep C that should hurt Gilead pretty badly. Now, in my Gilead model, I assume that Hep C kind of disappears, and I still think it's a long, so that tells you something about the HIV market for Gilead. But I thought that was interesting news. Celgene and Agios got approval for IDHIFA, a little bit ahead of schedule. It's kind of cool to see them get that approval. What was, I think, even cooler, and it sort of dovetails, is Bristol Myers buying this company called IFM for $300 million. This is a 2-year-old company. So 2 years ago, it was set up, and now it's being sold for $300 million, I think, plus $1 billion of milestones if they achieve them. So it just kind of goes to show you that, you can, even in 2 years, you can build a very valuable medicine. Shire is going to split off their ADHD portfolio, so that'll be interesting to see that as they've sort of converted into a rare disease company. Spinning off ADHD, I think, is a really good idea. So that'll be interesting. generic drugs are under siege after the Teva results, the Sandoz results. They're all, sort of, Lannett is another example. All of these stocks are under siege. What will happen to the generic drug industry? I kind of want to get into it, to be honest, now that everyone sort of wants to get out of it. So we'll see how that goes. Intercept had a patient death that resulted in a pretty big stock reaction for them. Geron's drug also had some setbacks with some protocol changes. There's a company called Imprimis that promised to make a $1 a cent or a dollar a pill Daraprim instead of a $750 pill from Turing, and one of their patients died. So their stock is hurtling towards bankruptcy. They're a so-called compounding pharmacy. Compounding is when basically it's not FDA approved, and they kind of just bootstrap the medicine. So it's a really weird process that doesn't make a lot of sense, and it's very dangerous in my opinion. And I don't know why the FDA lets these compounding pharmacies do what they do. Lots of people have died over the years due to compounders, and Imprimis is probably the only public compounding pharmacy, and they've been saddled with lots of debt problems and now this problem. And again, they wanted to make a cheap Daraprim, but it turns out the doctors don't want random drugs made by pharmacists in non-FDA approved conditions. There's no NDA approval here, so it's just sort of crazy that they let them do that. Dynavax had their great AdCom. I'm not following the stock too closely. I know a lot of you are interested in it since it's gone from like 4 to 16 in the last few months, so God bless anyone who's been involved. On the tech side, I'm interested in this AMP technology from Google, and so they're launching this stories sort of technology to compete with Snapchat, and I think Google is trying to sort of redefine the web with this AMP technology for mobile pages, which is pretty neat. And I think I actually think it's really cool technology. I'm not sure how they make money from it, but it's definitely cool technology. My eyes popped when I saw that Meituan is raising $5 billion. That's one hell of a venture capital round in a $30 billion pre-money. So this huge startup that very few people have ever heard of. So very interesting. Going to be looking at that more closely. Got a whole bunch of questions since this is a bit of a shortened presentation this week. I'll sort of go through these questions. What's so exciting about GSK? It's been the same stock price and same dividend for so long, asks Rick. Well, actually, that there's nothing wrong with that. A lot of people want their stocks to go up, and I certainly want GSK to go up. But a healthy dividend yield is pretty important too. So to me, GSK is like a bond. And eventually the stock will go up, but right now it's a 5% yield. I mean, that's a pretty amazing yield. It's better than most bonds. And I had this situation with J&J. With that J&J for many years, Buffett would complain about it. I would complain about it, and for many years the stock was you can see in the $60 range for 10 years. It was crazy. Look at this, 10 years, $60. But you were collecting a 2 or 3% dividend, and eventually the market figured it out, and the stock went to 130. So I don't have any problem owning stocks like that. They don't bulk up the portfolio. They don't hurt you to have those. Is there insider trading on macro trading? Insider information on macro trading? Yes, there is. You can get news from a Federal Reserve member or somebody in the Bureau of Labor Statistics, and if you traded on it, I think you would go to jail. Nobody's ever done that. I know people have insider traded on macro information, but nobody's been prosecuted for it, and it'd be very interesting to see if that ever happened. The SEC has great tools for insider trading on equities, but they don't have tools for that, I don't think, on macro trading. So it's kind of it's a really interesting question. I get that question quite a bit. It's a very, very interesting question. Thoughts on the market for the next few weeks or months? I have no idea. I don't think anyone does. That's not what I'm good at. I'm good at buying cheap stocks and shorting expensive stocks. Thanks for the question, Ryan. Do you read any analyst reports from Wall Street? Jason asks. Not really. I have broker relationships, but they're not usually related to analyst research. I think most elite investors don't think about analyst research. What are some of my biggest wins and biggest losses? Chris asks. This could take up many hours or even books. Certainly, I've made some losing trades that are leverage related. I think if you ask any investor what his worst investments were, they've involved leverage. Other than that, I certainly have thousands of losing investments that I can talk about. Certainly some entrepreneurial endeavors that I've had that have failed, that have cost me some millions of dollars. Those stick out as well. I think one of the biggest lessons I've learned from that is just because you're a good entrepreneur doesn't mean you can make any business successful. You have to sort of understand what your competence is, and you also need to put in the same amount of effort that you would put in your successful businesses. So focus and effort are still extremely important if you're going to make a business successful. On the wins, I don't know. I think that I've had some gigantic trades that have done well, and the thing I've learned from those is just try to focus and make sure you can prove that you're right, almost like a math proof, and you can make a really big bet without feeling like it's very risky. Gary asks if I have a huge room to store books because I seem to like to read physical books. Yes, I do. That's the answer to that. Jennifer asks, should I pay off my home before investing in stocks? So presumably you have some kind of mortgage that costs you about 4 or 5%. And so it's very simple. If you can make more than 4 or 5% in the market, you should invest in the market. Because then you're basically borrowing for 4 or 5%, and you're returning more than your cost of capital. Now the same question is, what level is your house appreciating at? Because that's the collateral for the loan. But there's no easy answer to that. Jeff says there's so much fake news. Should I invest in media? I don't know. I think that I'm going to stick to what I'm good at. Lizzie asks, how old is Trashy? Is she male or female? She thought it was a he. Trashy is a grown woman, and she is 6 in cat years, which is probably about 40 in or 30 something in human years. So I think that we're basically a couple. Andrew asks, why not buy puts instead of naked shorting or shorting a stock? When I say naked, I don't mean without a borrow. I mean just a plain old short. You can do that, but the puts have there's a mitigation. When you have defined risk in a put, you're paying for that defined risk. So if you graph the payouts, you'll see that they're slightly different, and there's no free lunch in the markets. There's no way to say, I'll just buy puts and I'll save this risk. No, you'll have to pay for that saving of risk. Taryn asks me about broad market valuation methodologies like GDP to market cap and others. How do you sort of look at the future? I've said many times that I don't think the markets naturally go up over time. In fact, I've spent a lot of time in the old investing lesson videos from, I think, probably lessons 1 through 15 talking about this. So I try not to forecast the broader market, but I certainly try to look at the relative market. So if you think about things like the sort of expanded yield curve that I like to look at, where you have really near-term money, the nearest term of all, the TED spread is at 0.24%, the short end of the curve 1%, long end of the curve 2%, corporates 3 and 4%, and equities themselves at 6%. I look at that and I look for relative movements and relative risk, but I don't try to forecast, say, any one of these rates any more than the other. I just sort of like to look at the differences between them. What am I reading? I've been reading the United States Sentencing Guidelines, which is a fascinating thing. I would just put that into Google, and you probably would enjoy reading it yourself. I hope you never are accused of a crime, but it's a very fascinating read. I've been reading Teen Vogue, which is my girlfriend Lauren Duca's magazine. It's a really fantastic, progressive magazine. It only comes out a few times a year, but I strongly suggest you read it. And then Edward Thorp's book, A Man for All Markets, which is a book about a guy who started out gambling and then ended up he's basically the pioneer of quantitative hedge funds, which is kind of a cool thing. Not many people know who he is, but he was responsible probably for most of the exciting, early days of quantitative investing. So fun book to read for sure. That's really it. You can email me at martin@thotpatrol.com. You can sign up for a beta of my new software company software at godel.systems. I'll see you guys next week with a much more fulsome and complete weekly meeting now that my trial is over. So thanks for everything. You guys are the greatest viewers, fans, whatever you want to call it. Appreciate that. And thanks for anyone who came out the other night for the celebration. And I'll see you guys next week. Thanks so much.